Artificial intelligence is the biggest investment story of our generation. But here's the million-dollar question. Why did one of its biggest players, AMD, just report absolutely blockbuster earnings, and yet its stock barely moved or even fell? Welcome back to the channel. Today, we're doing a deep dive into Advanced Micro Devices' stunning Q3 2025 results. We'll break down the incredible numbers, uncover the massive AI partnerships that change everything, and explain the market's cautious reaction. This isn't just an earnings summary, it's your guide to deciding if AMD is a must-buy AI stock for your portfolio. Advanced Micro Devices Inc., ticker AMD, is a global semiconductor company primarily known for designing high-performance computing and graphics technologies that power a wide range of devices, including personal computers, servers, game consoles, and data centers. Its core business revolves around central processing units under the Ryzen and EPYC brands and graphics processing units under the Radeon brand, which compete directly with industry giants like Intel and NVIDIA. By focusing on innovative chip architecture and forging key strategic partnerships, AMD has established itself as a leading force in driving the evolution of computing, artificial intelligence, and immersive visual experiences for both consumer and professional markets. First, let's talk about the headline numbers because they are phenomenal. For Q3 2025, AMD reported record revenue of $9.2 billion. That's a massive 36% jump from last year. Profitability was equally impressive. Their non-GAAP earnings per share came in at $1.20, beating estimates and growing 30%. They also generated a whopping $1.53 billion in free cash flow, proving this growth is high quality. And they're not slowing down. Their guidance for the next quarter is $9.6 billion in revenue, signaling they expect this strong growth to continue. So with numbers this good, what's the catch? To understand that, we need to look under the hood. The story of AMD's transformation is told in two segments, data center and client and gaming. The data center segment was the star, bringing in $4.3 billion. This was driven by their powerful EPYC server processors and, crucially, their new Instinct MI350 AI GPUs. This is the heart of their AI story. But the real rocket ship was the client and gaming segment, which surged an incredible 73% to $4 billion. This shows strong demand for their Ryzen AI PCs and gaming hardware. Essentially, AMD is winning in the data center and on the consumer's desk. The only soft spot was the embedded segment, which saw a slight decline, but it's a much smaller part of the business now. The takeaway? AMD's growth engines are firing on all cylinders. Now this is where it gets really exciting for long-term investors. The earnings call wasn't just about past results, it was about future dominance, and AMD announced a string of absolutely massive partnerships. They are now a preferred partner for OpenAI, helping to deploy a staggering 6 gigawatts of AMD GPUs. And with Oracle, they're building an AI supercluster powered by 50,000 AMD GPUs starting next year. These deals aren't for the current MI350 chips, they're for the next generation MI450 GPUs launching in late 2026. This tells us that the world's biggest AI players are betting on AMD's technology roadmap for years to come. This is a direct assault on NVIDIA's dominance. So with all this fantastic news, why did the stock see a slight dip? This is a classic case of buy the rumor, sell the news. Investors' expectations were sky high, and some may be taking profits, waiting to see the tangible results from these huge partnerships in 2026 and 2027. But here's the bull case. Financial Fortress. They have $7.2 billion in cash and are actively buying back shares. Clear guidance. Q4 looks strong, and they are confidently predicting 25% growth. AI market share. They are explicitly aiming to capture a significant portion of the AI silicon market by 2027. If they execute, the current stock price could look like a bargain.
Let's talk about the reasons to be optimistic, and there are plenty. First and foremost, AMD is riding the massive wave of AI and data center growth. They're not just a spectator, they're a key player with major partnerships with giants like OpenAI and Oracle. This isn't just hype, it's translating directly to their bottom line. In Q3 2025, AMD posted record revenue of $9.2 billion, with incredibly strong guidance for the next quarter. This is fueled by the launch of new cutting-edge products like the MI450 GPU. The big picture here is the long-term potential. Some analysts believe AMD could quadruple in value by 2030 if it continues to execute well. How? By offering competitively priced GPUs that challenge NVIDIA's dominance, and by consistently innovating in the high-performance computing space. For bulls, AMD isn't just keeping up, it's positioned to take a significant slice of the AI infrastructure market. Now, let's flip the coin and look at the very real risks. The most glaring concern for many investors is valuation. AMD stock trades at a sky-high forward PE ratio of around 156 times earnings. What does that mean? It means the stock price is baking in perfection. Any stumble in growth or a shift in market sentiment could lead to significant volatility or a sharp correction. Then there's the competition. AMD is going toe-to-toe with NVIDIA, the undisputed king of AI GPUs, and Intel, both of which have massive war chests for R&D. It's a brutal fight for market share. There are also external risks. Reports suggest that the initial frenzy for AI GPUs might be becoming more selective, with some customers pausing to assess their needs. Add in potential supply chain issues and broader economic pressures, and you have a recipe for uncertainty. This caution was on full display after their last stellar earnings report. Despite beating estimates, the stock fell. Why? Because the market is skeptical, wondering if this explosive AI growth is sustainable, or if margin pressures are on the horizon. So where does this leave us? The analyst community is fundamentally split. On one hand, you have optimism about AMD's strategic positioning, financial momentum, and innovation. They see a company capable of challenging the giants. On the other hand, you have caution due to the lofty valuation, intense competition, and near-term demand questions. The overall sentiment from Wall Street right now is overwhelmingly positive. The consensus rating is a resounding buy or moderate buy, with very few hold recommendations and virtually no sell ratings. Let's break down the key reasons analysts are so bullish. First, sky-high price targets. We've seen a wave of major firms raising their targets. UBS boosted theirs to a street high of $300, while Evercore ISI lifted theirs to $270. They're not alone. Loop Capital, Piper Sandler, and others have all set targets in the $280 to $300 range. That implies a significant potential upside from current levels. Second, the AI engine. This is the core of the story. Analysts are highlighting AMD's powerful position in two key markets, AI GPUs and data center CPUs. They're seeing robust, sustained demand driven by AI workloads, and they project this will lead to massive earnings per share, or EPS, growth in the coming years. In short, AMD isn't just participating in the AI race, it's supplying the engines. Third, strong financials. The recent Q3 earnings were a beat on the top and bottom line, with strong guidance for Q4. This confirms that the growth story isn't just theoretical, it's happening right now. Now, before you hit the buy button, it is absolutely crucial to understand the risks that analysts are also flagging. The biggest concern? Valuation. AMD stock isn't cheap. It's trading at a high PE ratio, meaning a lot of this future growth is already priced in. Some analysts worry this could limit the near-term upside. There are also concerns about margin pressures and the incredibly intense competition, especially from rivals like NVIDIA. The demand for AI chips is also selective. It's not a guaranteed rising tide that lifts all boats equally. The analyst consensus is clear. AMD is a strong buy for its leadership in the AI megatrend and its solid execution. The growth potential is very real. However, this is not a set-it-and-forget-it stock. The high valuation means it could be volatile. If you invest, you need to be prepared for bumps along the road and keep a close eye on quarterly reports and any shifts in the competitive landscape. Think of it this way. Analysts see AMD as a premium sports car, incredible performance potential, but it requires a skilled driver who's aware of the road conditions. What's your take on AMD? A must-buy AI play or too expensive? Let me know in the comments below. Don't forget to like and subscribe for more deep dives. Thanks for watching, and we'll see you in the next video.